So over the weekend, Disney decides to reopen their parks. And this is something that I've been contemplating constantly is that everyone wants to reopen, everyone wants to engage the economy. However, nothing has changed. Medically speaking, nothing has changed. If anything, it's actually getting worse. So Disney closed their parks, I believe, 4 months ago. And for some reason, they're reopening them now. And in California and in Florida, there's been a recent surge in cases. So I don't understand why they would do it. And I don't even want to read why they're going to do it. But today, because I had to bring it back to the stock market, so they open over the weekend. So today is the first day that the market can react. So let's see what the market thinks about them reopening their parks in the midst of a resurgence in cases. Good morning, everyone. It's a beautiful day in Craw Park. Let's jump right on in. Today's video is going to be a mixed bag of topics. We're going to start here with Aquilium. Hope I'm pronouncing that right. So this stock went crazy today solely because of the headline. So as you can see, the stock ran, and that's even pre-market, 260% pre-market based on a positive COVID-19 drug, right? So let's actually go to the chart and see what happened with this stock today. Now, it was trading around less than $10. Hit a high today of 31.03. Just goes to show you that anything COVID related is going to go crazy. FUBU could come back and say their FUBU jerseys will cure COVID-19, and I promise you the stock of that company, if it was listed on the exchange, would go crazy. So great opportunity there to capitalize on, once again, a COVID headline. All right, next, I'm going to talk about the earnings season. So we are kicking off the second quarter of earnings. Today, for July 13th, we had really one big name, PepsiCo. Now, as you know, I'm a Georgia man, and we don't drink Pepsi. However, Pepsi owns a lot of other companies that we do consume. But for the purposes of trading, it doesn't matter. Let's see what happened today with Pepsi. Let's go to the chart. All right, so Pepsi today did have great earnings, right? So they had a gain of $1.18 per share. So release pre-market, that's really, really good. However, the market kind of didn't respond as favorably as you would have thought. So right at the open, which honestly, this is people just taking profit. So we see that, a huge pre-market candle here, but for the most part, because it did gap up, right? So if we look back at the pre-market from yesterday, it was trading around 134.44, gapped up to a high of 139.80. So people were most likely just trying to take profit when the market opened. It did come back and try to test the pre-market level, but it kind of just chopped around. So, and then at the end of the day, it was a fade, but the entire market faded as well. So that's to be expected. So Pepsi did good on their earnings, $1.18, which makes sense because we're snacking a lot. We're eating a lot more food from the ownership of Pepsi. So definitely makes sense. Now, I want to get into what we have on deck this week. So tomorrow, we got a few heavy hitters. So July 14th, we have Delta Airlines reporting before the bell. Without even knowing, I'm pretty sure Delta Airlines is going to be reporting a loss for the previous quarter based on how things are going with COVID-19. We have JP Morgan Chase, Wells Fargo, Citigroup, Once again, had no idea, but Barnes and Noble is actually listed on the exchange. And we got a few other smaller names I'm not familiar with, but for one day, those are some really heavy hitters. So Delta Airlines, JP Morgan Chase, Wells Fargo, and Citicorp. So it looks like we got a mix of mostly banks and then, of course, the airline. If you watch my previous video, you know if you're investing in an airline stock such as Delta Airlines, United Airlines, you do not want to be in those stocks right now because, as you know, well, you know what? Just watch the previous video. I'm not want to even get into it. All right. Last topic of the day. I want to talk about Disney. So over the weekend, Disney decides to reopen their parks. And this is something that I've been contemplating constantly, is that everyone wants to reopen, everyone wants to engage the economy. However, nothing has changed. Medically speaking, nothing has changed. If anything, it's actually getting worse. So Disney closed their parks, I believe, 4 months ago. And for some reason, they're reopening them now. And in California and in Florida, there's been a recent surge in cases. So I don't understand why they would do it. And I don't even want to read why they're going to do it. But today, because I had to bring it back to the stock market, so they open over the weekend. So today is the first day that the market can react. So let's see what the market thinks about them reopening their parks in the midst of a resurgence in cases. Let's go to Disney and see. Yep. The market hated it. As you can see, it hit a high pre-market of $121.40. But when we zoom into the chart, it closed around 116. So the market obviously agrees with me. Opening parks, probably a bad idea right now. So that's actually going to do it for me today. Thank you so much for watching. I really do appreciate it. For those listening on the podcast, thank you, thank you, thank you. Please subscribe, share with your friends, and you can watch the actual video on YouTube. So thank you so much again. I'll see you next time.